Right, so we have another totally flat day in the market today. If we look at our gain today, it's basically 1%. After hours, a little bit below zero. It's basically break even. And we look at our performance today overall, and it shows a lot of negative, but they're all small numbers here. One, two, a couple decent ones. It's offset by Crestwood Equity, which is up 13% today, and PVAC, which was one of the two oil stocks we have, but they also do bottled water, so that's a heck of a hedge, is coming back. And then UCO, which took the dive off the 50-meter high board, is coming back as well. So that's coming back at 10%. So overall, it's a dead even. I honestly think we're sitting here, when they talk about a U-shaped recovery, I think we went down, kind of jagged up a little bit, but it is just dead calm. I mean, the market is not moving. And I just think people have, I think part of it is they've baked in, this is kind of the, part of like the Elizabeth Kubler-Ross, like the 5 stages of grieving. This is kind of the acceptance part that where we're at. And they're just, a lot of people are just afraid because of the jaggedness. Maybe it's some trauma of really moving up. So I think right now, until we get some specific news where we have places opening up, and I mean big name places opening up, or they're going to announce like the college football season starts, or Major League Baseball starts, or the NBA is resuming, I don't really think you're going to get a whole lot of maneuvering. Even the volatile stocks aren't really doing a whole lot. So as we look at our stock ticker, this is basically at the end of the day. We'll look at the holdings here, and pretty much everything is in the black. IVR, Invesco Real Estate, actually went down a little bit, and they had some bad news as far as just, they had some skittish investors, so we're going to talk about what we're going to do with that in a second. But other than that, I mean, pretty much everything we all have right here is just absolutely killing it. They're keeping their gains. Braemar Resorts is double, basically. PVAC, which dropped below, is almost break even. So we're getting close to getting at a break even point. We'll see. We might keep that. We might sell it. Might reduce our stock investment in that. I mean, who knows? We'll see what we do. But UCO, we're going to wait till it gets back to 25, which, before the reverse split was about $1 a share. So it went from like 11 or 12, I think it was 11 up to 16. So it's moved in the right direction. And honestly, we are just going to sit on this and not touch, definitely not touch UCO for sure. So with that being said, we had our El Dorado Resorts limit order taken yesterday, and we still have our Every and our Menlo limit orders. Now, Every, EVRI right here, they basically manage cash services for casinos, so like ATMs, credit card advance machines, things like that. So really, they're probably not going to move much until we start to see Vegas come back. The good news is the city of Las Vegas is going to be one of the first places to come back because their entire city economy is tied up in the casinos and the entertainment. So they're going to be the first group to come back. And right now we have a whole bunch of ATM machines that aren't being used, which is why we're not seeing a whole lot there. So, but when it comes back, I think this one's going to explode. So right now, price is $325, and let's see, where are we at here? Boom, boom, boom. What are we doing for a limit order here? I have that backwards. I might have that backwards. Let me take a look here. Let me just take a quick look. Those numbers look backwards, but we'll see. Excel charts are a lot of stuff to work on. So let's take a look at EVRI. Ah, that's why. Okay, that makes sense. So we'll go to EVRI, and it's not 325, it's 385. See? So, all right, so we had our limit order for ERI get taken. We added that to our portfolio. Let's go ahead and shift these up. All right, current price for EVRI is 385. When it drops down to 365, we have in order to come in. And part of the reason I'm doing this is because when we look at EVRI right here, they have a 100% buy rate. So this is just I'm just taking cash. I'm just taking the easy layup instead of shooting the three, basically. And then Menlo, which is another one that we looked at here, that's a biotech company, and they had one or two of their studies didn't pass one of the safety phases or whatever, so they had to start over. They took a big hit on their stock, which is the reason they're even up here right now. So we look at Menlo. That's this guy right here, and they have an 88% analyst buy rate. So this is just one of those I think is just a good value buy. So it's currently at 133. If and when it gets down to 115, we'll pull the trigger on that. Now, as far as Invesco, we had some of their investors start to get skittish. So for me, I think we have enough of a hit in this one that we want to be a little bit more conservative. Not a lot more conservative, but we want to, if we have a choice to take some of the money and run and reinvest it, we're going to do that. So basically the cost right now is it's at 280. If it goes back up to 288, then we will do a limit sell on this run. And the only reason I do that is because I bought it at 287 here, and I don't take losses. So with that being said, that's kind of what we're looking for. As far as the stocks to look at, again, not a whole lot changed. We have IVR, Redwood Trust, which is real estate up there, and MFA, but nothing's changed. I mean, there's no reason going through all these again. The market's still as a lake without wind. So until we start to see some movement, we're just going to hold steady. But so far, our best performers recently over the last week have been Crestwood Equity, and these ones are going under correction. So with that being said, we'll see what we're going to do, and we'll see what the market has for us tomorrow. But we're in a U-shaped recovery, which means there might be a little bit of time where there's not a whole lot moving, but we do want to pay attention to it every day in case we see one of those little gophers stick its head out, so we can just whack it and take advantage of that. There's going to be opportunities, but it's not going to be the manic, depressive, bipolar. Like I dated a girl that had bipolar. This is exactly what the market was like until recently. Now it's almost like, all right, I'm dating a crazy person. I have no expectations of her, whatever. And I think that's where the market's at right now. But I think this market is very much sentiment driven and headline driven. So we're going to see what kind of headlines are out there. The good positive tailwinds we have is that we have a president who he said, I'm not going to let the oil sector fall. So that just means we have a floor under these, and these ones should be fine. And then also at the same time is we have the Treasury behind the scenes buying a whole bunch of commercial real estate and mortgage-backed securities. So, and with that being said, we have a number of stocks here that are in that sector. So a lot of good tailwinds happening, and this is kind of like the calm before the storm. I don't know when the storm's going to start. It could start tomorrow. It could start in a month. I'm not sure, but we're going to be ready for it when it hits. So with that being said, see you tomorrow.